In this presentation, we will record two receive payments amounts, payments received for invoices recorded or sent out in the past, payment received possibly in the mail, possibly check in the mail for the invoice in the past for service or goods sold in the past within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our Get Great Guitars file. We are once again going to say we have a received payment, entering two received payments. Let's think about what that process is quickly and then go right into it because we have seen a received payments in the past. We're going to select this plus item up top. We have the customers. We have invoiced. Now we're going to receive payment. Remember, that's different than if we had like a cash register and we were getting paid at the same time. If we're selling a guitar and we got paid at the same time, then we would have a sales receipt and we would record that at one time. This is a two-step process in those situations. Oftentimes you think of them as a service type company. We're going to be using inventory, but oftentimes with a service type company, you would then have a service done like bookkeeping, bill the client, expect then to receive payment in the mail. That would be the typical process. That's what we're doing now. Invoice out already. Now we need to record the received payment. That's what we're doing now. We got a payment in the mail. So our imagination is we opened up the mail, we got some payment from Jones Guitars, a customer, and we say, well, I hope that's a payment because we know that we sent out an invoice from them and we would like to get paid for that. That's what happened. We got money in the mail for an invoice that went out in the past. So it's going to be from Jones Guitars. If we select the drop down, we can see Jones Guitars. If we start to type in Jones Guitar, it will then populate as well. So there is that. We're going to say that the received payment once again is on January 12th, so that we're getting paid quickly here. So it's going to be January 12th. The payment method typically will be a check if we get it in the mail. But if we're going to say cash this time, maybe they gave us cash in the mail, we got paid. Maybe they came into the store and paid us at a later time after we invoiced them. That's nice. We got cash. So no reference number if we got cash. We once again are going to use the undeposited funds. So we're going to use the undeposited funds as a holding account before we go into the checking account. So recall that if we have something that's going directly into if they transferred it into our checking account, then we could just use the checking account and it will be deposited in that format. However, if we're going to get multiple payments, if we've got a cash register, if we're going to get paid more than one amount per time period, if we're going to hold on to that check and group multiple checks together before going to the bank, then it's useful to use undeposited funds so that when we do go to the bank, we will deposit all of them in one time period, and that deposit that will show on our bank statement will be easy for us to compare to the deposit that we will see in our books when we reconcile. Highly recommend doing that so that you can reconciling being huge internal control for both large and small companies. Even if we're small, reconciling is one of those internal controls we should do. We then could input the amount here, but we could also just go down here and check off which invoice is related to. We have these two invoices outstanding for this particular client, Jones Guitars. If we select either of them, we could then see the invoice. We see the hyperlink there. I'm not going to go to it now. Do you want to leave the savings? I'll say no. We could if we wanted to, though. If we wanted to link that out and say, what is that invoice? We could do that, but then we'd have to re-input our received payment. So we won't do that. If we check this one, it's going to put the amount here, and it's going to put the amount here that is owed for that invoice. So let's select that item. There it is, $7,500, $7,500, assuming we got paid the full amount of the invoice. This is an invoice, I believe, that was from the beginning balances. We set up as part of our beginning balances, in other words, Jones owing us money before we started tracking information for this month, for this file, for this QuickBooks file. So there's going to be that $7,500. If we got paid something other than that, we could put something below that, and then it would still be remaining an outstanding balance on that particular invoice. This will be that. It looks good. We will then look at the financial statements, but before we do, we will add another received payment and then go back to it. We can print this report. This is not one that we often do reprint as much, even though we still call it a form, and we call it a form in QuickBooks. QuickBooks calls it a form because this form is used to drive a transaction. It's not called a form because it's something we typically give to customers or print it out. We don't typically give it to the customer. The form is what used as a data input screen. The receive payment in essence means that the accounts receivable is going down. So when you hear receive payment, you're saying, okay, that means people that owed us money have now paid us. Accounts receivable is going down. What probably is the thing that triggers in your mind is that cash is going up. That's true. We got money. We got paid. So cash is going up, but really this form is saying, hey, accounts receivable is going down. That's what receive payment means. And then we're reporting the other side to a cash account, which could be the checking account, but we're putting into undeposited funds, a holding account, a type of cash account, but a current asset under QuickBooks settings. And then we'll put it into the checking account when we then go to the checking account. So we're going to go then to the save and close. We're going to go to save and new. We're just going to enter a new one, save and new, and we're going to put we got another payment in the mail. It's been a good day for the payments. This one is from Smith Guitars. So if we select the drop down, we could find Smith, or we can just type in Smith Guitars, and there we have it. So Smith, and once again, if we scroll down, we're going to keep the date at the 12th. The payment method we're going to say is a check. It's a check. I don't have a reference number. We could put the reference number of the check, but it's not a required field as well. This isn't our check number. It's a check number of the check that we would then be receiving. We are once again going to use that undeposited funds. We're not going to put it directly into the checking account, but that holding account, and then deposit them together at a later time. The amount we won't put here. Instead, checking off the invoice. So if we wanted to see that invoice, we could see the hyperlink, but we're not. And we're just going to check it off. There's the 8,000. Once again, this 8,000, I believe, is from an invoice from the beginning balances, the opening balances we set up as we started the new company file, meaning what was owed to us prior to us entering data. We didn't create an invoice in January, our first month of operations, within this new company file to Smith Guitars. They owed it to us in our prior accounting system. We set up the beginning balance. QuickBooks set up an invoice to facilitate what was owed to us as the form. And then we have the original balance. That looks good. Everything looks good. If we had, once again, anything other than 8,000 paid, we would put something other, and there would still be an outstanding balance for that invoice. Then we're going to go ahead and select the drop down and save and close. Save and close. Now let's take a look at what happens in our reports. So we're going to go to the reports on the left side. We're going to go to our favorite reports, or one of them, the financial statement report, the main report, one of the two main ones, the balance sheet. Let's check that out. It should be in the favorites. We're going to scroll up top. We're going to change the dates from 01/01/19 to 12/31/19. That's January through December 2019, and run that report. Then we're going to scroll down. We received payment, but we're not putting it into the checking account. So it doesn't go into the bank account. Remember, this is different than you might see in normal balance sheets where it would be called cash. We did get cash, kind of. We got a check or actual cash, but it's not in the checking account, which is what QuickBooks is calling this first category. And therefore, QuickBooks puts the undeposited cash, the undeposited funds, the checks, the currency, the stuff that we're holding on to that hasn't reached the bank. Even though it's equivalent to cash, it's not in the bank, and therefore it's not in the bank account, but in other current assets as undeposited funds. Again, if you were to group this information together in like a standard balance sheet, you probably would put this amount in with cash and call this amount up top, not the checking account, but combining it with all cash items, checking, saving, and undeposited stuff. So if we select this undeposited funds, then we're gonna see these amounts. We should be holding on to these. Obviously, these are large amounts because these are the undeposited balances we set up at the beginning. But we see those amounts that we just put in there. We see the payments for them. We had Smith and Jones. If we select either of them, we will then be driven to that receive payment document. If we close this back out, notice what it's called here, payment. And the form's called receive payment. So just keep that in mind. They've shortened it for the transaction. This basically means receive payment form. That's what this is, receive payment form. We have 20,500, so we got a lot now. We should be going to the bank pretty soon if that was actually the case, and we're holding on to that. So we should really go to the bank. So we're going to go back up and say back to our report. The other side is going to be in the accounts receivable. So our accounts receivable, we can see went way down. So if we go into the 829.50, and this is really what you should think about when you see the payment. you're really thinking accounts receivable. That's what the first thing that should come into your mind. It's probably not, because it's probably cash or payment or some kind of increase in an asset, but really what it means is the accounts payable. That should be the first thing that you want to train yourself to be thinking of. The payment went down, the receivable went down. So if you select these payments, then you see the received payment form. Closing that back out, we can see that those received payment forms are decreasing the receivable because now we got paid and therefore are not owed money from customers for them anymore. If we go back to our balance sheet, then here's that. I'm going to take a look at our report detail now for the accounts receivable. I'm going to make another tab, right-clicking on the tab up top. We're going to duplicate that tab. Because this will be called the balance sheet tab, I'm going to take this other tab and pull it to the right of it. And then we're going to take a look at another report, the AR detail, because we're working primarily with accounts receivable going down now. And that's going to be in the Who Owes You section. So open up the Who Owes You section. Who owes us money as the company is what that is indicating. And we're going to look at the accounts receivable detail. So we want to go, or the customer balance detail. Customer balance detail, accounts receivable detail, same thing. Customer balance detail. And then here's our customer balance detail. You'll see it's a lot shorter. We only have Anderson and Jones now. And the other items that we received the payments for, the related invoices and the payments are gone because they no longer are outstanding. They're no longer due and outstanding. If we want to see the detail for them and see them match up, then we can go to the sales item on the left. That's where our customer information will be. Then go to our customers, and then we can select those customers that paid us. We looked at Anderson last time. I believe this time we had Jones Guitars. So if we select Jones Guitars, we can see detail for Jones Guitars. Here's the invoice. Here's the payment. So this payment is now closed. The invoice is paid. If we select the invoice, we will also see the payment up in the upper right. There's the payment. If we want to see the payment form, then we can select the payment here. That'll give us the information, date, and the amount applied. If we want to see the form, select this hyperlink, and that takes us to the receive payment form, which we have filled out. Closing this back out, if we go back then to our sales and we want to go to our customers, we also had a payment, I believe it was for Smith Guitars. So if we select Smith Guitars, there we go. Once again, we have our invoice and it was paid, and we can see how they're tied together if we select those items. If we select this time the payment, we can also go back from the payment to the invoice. Remember, we have that hyperlink. There's the invoice number. If we want more detail, if we want to see the invoice, we can select that invoice. It will then go to the invoice. It'll connect to the payment amount, and it'll show us that detail connecting the two together. For more accounting information and accounting courses, visit our website at accountinginstruction.info.